Hi friends, in this video we'll learn how to deal with closing stock when it is given inside the trial balance. We'll learn how to prepare a trading account when closing stock is given inside the trial balance. Extract of a trial balance, Messrs. Sunil Traders as on 31st March 21 is given to you. Particulars, debit rupees, credit rupees, opening stock 1 lakh. Adjusted purchases, you are seeing this amount for the first time. Adjusted purchases 8 lakh. Sales, credit 17 lakh 50,000. Sales returns, debit side 50,000. Wages 1 lakh. Carriage inward 50,000. Closing stock, now it is given inside the trial balance 2 lakh. Now you are given extract of a trial balance. You are required to prepare the trading account. Now in our earlier videos we have seen that closing stock was given outside the trial balance. In many problems in final account we find that you are given as part of adjustments closing stock. When closing stock is given outside the trial balance, we pass a closing entry, we pass an adjustment entry. The entry we pass is closing stock account that are to trading account. This entry we pass, and because of passing this entry, what happens is this trading account is credited and closing stock account shows a debit balance, and it is shown on the balance sheet asset side. So the two treatments were trading account was credited and balance sheet it was shown on the asset side. When it was given outside the trial balance, that means when it was given as part of adjustments, this is how we dealt with it. But in this problem, closing stock is given inside the trial balance. Now the question arises, what is the entry we have already passed to bring it into the trial balance? The entry which we have already passed is closing stock account that are two purchases 2 lakh rupees. This entry has already been passed. Because of passing this entry, the purchase account has been credited and closing stock account is showing a debit balance. Now this purchases is after subtracting closing stock of 2 lakh. If you don't subtract the closing stock from purchases, what will happen is the entire purchase will be debited to the trading account and there will be an impact on the profits. Okay, so when some goods remain unsold, the cost price of those goods cannot be debited to the P&L account or the trading account. Only the cost of the goods which have been sold should be debited to the trading account or the profit and loss account. So because some goods are remaining unsold, we reduce it from purchases. So when closing stock is shown inside the trial balance, that means this entry closing stock account that are to purchase has already been passed. Because of this, the purchase appearing in the trial balance is after subtraction of closing stock. That is why it is called as adjusted purchases. Now I'll prepare the trading account. Trading account for the year ended 31st March 21. Particulars, rupees, particulars, rupees and rupees. Let us start preparing the trading account. Opening stock account, these goods would have been sold during the year, so they have to be debited to the trading account. I'll start in a different way in this problem. I'll credit sales. By sales 17 lakh 50,000 is the income credited to the trading account, less sales returns. Sales returns has to be subtracted from sales 50,000. So the net income which is credited to the trading account is 17 lakhs. Now what am I required? I am required to debit the trading account with the cost price of the goods sold. So this is the sale price of the goods sold. The cost price of the goods sold has to be debited here. It has to be matched. Opening stock was sold, so the cost price of opening stock has to be debited to the trading account, because when I sold these goods I got this income. That is why it is debited to the trading account. Two adjusted purchases, it is 8 lakhs. Now this amount is purchases less returns and also after closing stock. So after doing these adjustments, this amount is coming. So this is the cost price of the goods which has been sold. That is why I am debiting it to the P&L trading account. Then sales return, sales we have completed. Wages, again wages has to be debited to the trading account. Wages, how much is the wages amount? Wages amount is 1 lakh. So wages amount should be debited to the trading account, 1 lakh. Next, carriage inward 50,000. This is also a cost incurred during the year. To carriage inward 50,000. 50,000. This also has to be debited to the trading account. Closing stock 2 lakh. Now I always credit the trading account with closing stock. I write buy closing stock here 2 lakh to reduce the purchases. But in this problem, closing stock is already given inside the trial balance. That means this entry relating to closing stock has already been passed. Closing stock account data to purchases. Purchase account has already been credited. This amount is after subtracting that closing stock value. Again, it is not to be shown in the trading account. It has already been subtracted from the gross purchases. It will be shown only in the balance sheet asset side. So what I'll do is I'll show the closing stock in balance sheet asset side. I'll write closing stock 2 lakh. Why is it not subtracted from the purchases? Because it has already been subtracted. And why am I not crediting the trading account? Because it is already subtracted from purchases. That is why I'm not crediting the trading account. So now I can calculate the gross profit. 17 lakhs is the total. 17 lakh minus 9 lakh 50,000, not 9 lakh, 1 lakh, 8 lakh, 9 lakh plus 1, 10 lakh, 10 lakh 50,000. So 6 lakhs 50,000 is the gross profit. To gross profit transferred to profit and loss account. Okay, so this will be transferred to the P&L account. So the point you have to understand is when closing stock is given inside the trial balance, that means we have already passed an entry closing stock account data to purchases. Purchases is after subtracting closing stock. Such purchase is called as adjusted purchases. In such a situation, when closing stock is already given in the trial balance, it should be shown only in the balance sheet. Only in balance sheet, and we should not credit the trading account again because it is already subtracted from purchases. Crediting the trading account will result in double subtraction of the closing stock. Okay, so the simple point you can remember is closing stock when given inside the trial balance, it should be shown only on the balance sheet asset side. It has already been reduced from purchases. So this is only the cost price of not all the goods purchased. This is cost price of the goods which have been sold.